okay? So say you decide you're going to put in $100 a month. What that needs to mean is that you've decided that $100 a month, if I don't ever see it again, it's not a big deal, all right? Piece of cake. So we've decided how much you're going to put in. The amount you're going to put in is not going to be a huge percentage of all your savings, and it's also not going to be any amount that if it disappeared tomorrow totally, if the whole interweb crashed and you could never see it again, then you're going to put that amount in. So see, you've decided we're going to pretend that's $100. So we've determined that it's $100. Maybe it's 1,000 for you, maybe it's a 10 for somebody. Hey, I'm Pam Pryor, and this is the Cash Flow Podcast. We're going to talk about everything related to money in your business. Without further ado, let's hop right in. Welcome back to Cash Flow. Really glad to have you here today. On news, we're going to cover something that's on everybody's mind, and that is there is a new way that you can find out exactly where your tax refund is in processing. So let's get those tax dollars back quickly. Stick around for what's news. Second of all, my favorite part, we're going to look at a new beer, and our beer this week that we're going to talk about is Cardinal Pale Ale from Nebraska Brewing Company. We seem to be out in the Midwest today. And then finally, here's the big one. Speaking of taxes, on the other hand, the good Lord taketh away. There's Bitcoin, where right now the good Lord is given. And we're going to talk about how you can get on board with some of what you're hearing all of your more adventurous buddies talk about, and you're actually starting to hear more and more about now on regular media. And that is Bitcoin. What the heck's going on? Why has it exploded? And how can you take advantage of it? Crack it open and see what we've got here today. Good spray there. And we are looking at the Cardinal Pale Ale. Let's see what we have. Here's the pour happening. Holding it up to the mic. To the camera instead of the mic. All right, let's see what we got there. Oh, now we're talking my style. Nice and clear. It's an ugly head there just because I poured a little fast for the camera, but I like the look of it. I can see through it. I can see you through it, so I'm happy with that. All right, let's take a quick sip, and then I'll tell you a little bit about this brewery. I'm going to let that sit for a minute and tell you about Nebraska Brewing Company. Just want to make sure I got that right. And it was opened by Paul and Kim Kavalok. And what I love about this story when I read it, and the reason I'm so excited to try this, and I really hope I like it, is this beer was like totally born by accident. And it goes back into just before the 2000s or early 2000s. And Paul was brewing away, and he had a smell he was looking to try and get. And he tried millions of, all right, exaggeration. He tried hundreds of combinations of different herbs and malts and hops and you name it. He kept trying. He couldn't get it. Finally, one day, he's like, I'm done. I'm totally done. And he just grabbed a handful of leaves. I think I actually on the website could tell you what leaves they were. And in a fit of rage, just prior to, I'm reading this for you now, just prior to dumping the batch of beer, Paul grabbed a large bag of Cascade leaf hops that he happened to have on hand and dumped the entire contents into the now open fermenter. He was so mad, he tossed the lid on top of the fermenter and he walked away. Okay, so he had a fit of rage. Next day when he went to clean it up, he went, oh my God, that's the aroma I've been looking for forever. And that's what started his quest on this brewery, which is now many, many years later. And actually the story's really good. If you want to go to the website, we've dropped it down here. But the story's really great. He's been through a lot of battles. He went through what was the huge recession back in 08 and 09. He survived that. They survived COVID. He's adapted to a bunch of changes. When it comes to being an entrepreneur, this is that kind of story that I think if you are at all feeling defeated or tired or broken, take a look at this story and watch what Paul and Kim have done. And crack yourself a beer.
What's your rating?
Oh, my rating. Okay. Oh, I didn't even talk about the beer itself. Okay, here we go. So let me read the official description. I'm going to do it backwards this time because I'm actually oddly having mixed feelings. So I want to be able to express them both. So I want to see what it officially says. So this American Pale Ale is golden in color, mildly bitter, and characterized by floral citrus-like aromatics, which are the result of an additional dry hopping with a very large amount of cascade hops. Well, we just heard about how that happened. So crisp and crystal clear, which I agree, and completely enjoyable. And I do agree with the completely enjoyable, but now I'm trying to get the taste down here. Yeah, I think it's the floral that's confusing me. I'm not used to a floral taste in beer. I recognize the citruses. I recognize no citrus. This has something a little bit different, and that really is floral. It's a good way to look at it. So how would I rank this on the PBKPI? PBKPI stands for Pam's Beer KPI. It's time for our PBKPI score. I suppose I should lead into that segment that way. I would say the PBKPI score for this one today, we're going to give it a 7. We're going to give it a 7. It's good. It's a little confusing to me, I think. I think it's the floral that's a little bit confusing. But it doesn't stay on your tongue in a really nasty way. I kind of like it. So, Francis, I think we're going to go with a 7 on this one. I'll have to ask you to taste it later and see what you think. If I leave you anything after these awesome topics we're going to hit on today. Because I may just have to drain the whole glass just to get these amazing 2 things out of me that I've been busting to tell you. And the first one is, hang on for the news segment. Today in our news segment, if you are like most of America right now, you are getting a refund on your tax return, you filed that sucker already and you're waiting for that tax refund. Good news is this is a very short news segment today. There is a link, and it's down here in the bio. The IRS has actually provided a link that you can click on, and when you click on that link, it takes you exactly and straight to a spot where you can find out about your tax refund. You'll put in, I think it's the last 4 of your social, your last name, your date of birth, and I think maybe what kind of refund you were expecting, like the amount of the refund. Anyway, there are 3 or 4 things you're going to put on that blank. We're going to have a link to it here, and they're going to tell you exactly where your refund is in its process of getting back to you and in your bank account. So I thought that was pretty cool. We wanted to make sure we included that in our news for you. All right, today's story is all about Bitcoin. And the reason it's an important story is because one of the things I've seen more and more on my clients' balance sheets is things like Bitcoin or Ethereum or Robinhood or some of these names that you've probably heard. If you're into the crypto DeFi world, then you know everything I'm talking about. But if you've been on the periphery of what's happening in this whole crypto thing, then you've heard the words Bitcoin, Robinhood, crash, lifetime high, all of those things over and over again. And I'm going to try and pull some of that together for you today because I've been talking to Francis, and I'm just going to continue my conversation with him. Because what's happening today is that the Bitcoin price is about to challenge the highest it's been ever. And that's around $69,000. And this has happened like in breakneck speed. So it's feeding the whole narrative about the fact that this is like a roller coaster ride. So the thing I'd say is, yeah, it is a roller coaster ride, right? That's cool. Do you want to be on it or not? And the thing that I would say is it's been fun as somebody who's been playing and learning about this sometime, I guess kind of during COVID is when I dove in here till now. And I will say right off the bat that if there is an 100% spectrum of what there is to know about crypto and decentralized finance and Bitcoin, I am probably about 2 to 3% along that line. Now that said, with that 2 to 3% that I am along that, I probably know more than about 90% of Americans right now about crypto, DeFi, etc. Not bragging on that, I'm just saying that it's a really niche thing right now. But what's happened with Bitcoin is over the last week, and you'll be able to pin exactly when I'm recording this, it's been exploding in the regular news. Everybody's talking about Bitcoin approaching this $69,000 per share mark. And what people are realizing and hearing the stories of is the people who invested 2 years ago, 2.5 years ago, when it was way, way down. I can't remember exactly, but somewhere in the 20s. and bought, hundreds of thousands of dollars of this stuff. They've been sitting on it, and now that investment has tripled, essentially, or more. I think it may be approaching quadruple right now. But the long and the short of that is, look, the market got to a high, it crashed, it went back up. And now everybody's sitting around saying, oh, well, is it going to crash again? And the only thing that's really happening right now is what's fed by the media, and that's emotion. So you're feeling probably one of two things. You're feeling either like a FOMO, like, shit, why didn't I put my $100 in that 2.5 years ago? Or you're feeling a euphoria that's telling you, I got to get in now. I got to get in now. And the absolute worst case is that you're feeling both of those at the same time, right? So it's easy to listen to these guys who have these crypto podcasts. They have them. They've been doing all the things to invest like wise, savvy, heavily studied investors who've spent a lot of time learning about this stuff over many, many, many years. But what you're hearing them say is, I was worth 500,000 yesterday, I'm worth $1 million today, kind of thing. That's going to feed both of those emotions. So you got to be really careful. So you're going to feed FOMO, you're going to feed euphoria. So it's going to make you say, hey, I got to get in on this train ride. Or it could make you say, I got to get in on this ride. And you are asking, hey, what do you tell somebody who says, I think I want to get on this train, how do I do it? So this is not investment advice, because I would not ever give investment advice. I am not telling you to buy Bitcoin. I'm not telling you not to buy Bitcoin. I'm not telling you to buy a different asset. I'm just going to kind of talk to you about a few things to think about while you're getting ready to maybe put some money in the market. And instinct will tell you, look at this hysteria. I'm going to take 50% of my savings, or I'm going to borrow money from a credit card, even worse. And because they're making 50% in crypto and I'm paying 20% in credit card interest, I'm just going to take all the money out of my credit card and go invest it in Bitcoin. That is a hell no, okay? Never, ever, ever. The way you want to think about this is the way nothing is new. Or maybe what I'll say is everything old is new again. This particular asset, which is a cryptocurrency, it's digital, is the first of its kind that's digital, but it's no different than the very first stock that was ever issued, stock certificate, no different than the very first option that was sold or future that was sold or what they call ETF that was sold, okay? It's just another asset. So let's not go too crazy and think that it's something hyper special that can make you rich tomorrow. It is an asset. And the reason I can tell you that is because what's happening? What's happening is right now, the traditional finance folks are engaging in this, I'm going to call it the area, but essentially Bitcoin right now. So the big guys like Fidelity, like Grayscale, like BlackRock, who have and manage IRAs for a lot of people who have built up savings in IRAs or pension funds, wherever your money's being saved today by large institutions, these guys now are playing in the field of Bitcoin specifically. I'm not going to go into all the details of that, but about 3 weeks ago, they joined the fray, and since that time have pumped $8 billion, I think, it may even be more than that, $8 billion into Bitcoin. So that's a big part of what's helping this rise happen. So the reason I say this is a little different now than sort of just some kids playing around with computers and creating this thing called Bitcoin, there is a real asset now that the institutions are even paying attention to. So if you want to, the cool thing about this asset though, is you don't have to wait till you have a $10,000 IRA. You can actually look at your savings account today and say, I've got $5,000 in there, and I know that I need to have at least $4,000 for the things that are going to happen to my house this year. So I know there's $1,000 in there I could kind of play with. Maybe I'll take that $1,000 and go buy Bitcoin. And I would say, wait a minute. If you've got money to invest, you want to do, again, what's old is new again, make sure that you diversify. What does that mean? That means you want to have some percentage of what you're going to save in a savings account or an IRA or wherever we're going to put that when we talk about it, right? But there's a small amount of your portfolio you want to play with in a wilder ride. You might lose it all. You might end up blowing away the value of your entire portfolio and retiring 5 years early. You don't know. But if you don't play in that market with only the amount of money you're willing to lose, then you can get in trouble. So what I would tell you is, first of all, when you want to determine, if you want to say, hey, I'm ready to get in the game, if you want to get in the game, Pick the amount you want to get in the game with. And the one major thing I would say about this is it cannot be more than you could absolutely lose without any bother, okay? So say you decide you're going to put in $100 a month. What that needs to mean is that you've decided that $100 a month, if I don't ever see it again, it's not a big deal, all right? Piece of cake. So we've decided how much you're going to put in. The amount you're going to put in is not going to be a huge percentage of all your savings, and it's also not going to be any amount that if it disappeared tomorrow totally, if the whole interweb crashed and you could never see it again, then you're going to put that amount in. So see, you've decided we're going to pretend that's $100. So we've determined that it's $100. Maybe it's 1,000 for you, maybe it's a 10 for somebody else. Once you decide you're going to put it into, let's just say Bitcoin for now, and I'm going to talk about Ethereum. I'll save that for another one, or actually a little tip at the end of this show. You want to take it and you want to do what's called average cost investing. And again, this is what's old is new again. All that means is don't just go out and buy $100 of stock on the first of the month, okay? Go instead, or $100 of Bitcoin at the first of the month. Instead, set up a Coinbase account. You can do it very easily. It's free. You set it up. I'm not saying it's the best or the worst to use because I'm not endorsing anybody. And there are millions of platforms you can do this on. But for now, I picked Coinbase because it was the most user-friendly and understandable to me as a neophyte when I started. It's like, I don't know how to do the rest of this stuff. You don't have to like set up a wallet and all of those things, which get kind of complicated until you really kind of get familiar with what it's like to even buy Bitcoin in the first place. So get yourself a Coinbase account, but go in there and what it'll say, if you click on Bitcoin, it'll say, would you like to set up a recurring buy? You say yes, you take that $100, divide it by 30. So say it's going to be $3 a day. You tell Coinbase, go pull $3 a day from this account and buy Bitcoin at $3 a day, $3 a day, $3 a day. So at the end of the month, you've bought $100 in Bitcoin, but you haven't risked buying it on the wrong day, right? If Bitcoin is 50,000 on Monday and 60,000 on Tuesday, and you happen to buy it on Tuesday, you're screwed. If you happen to buy it on Monday, you win. But guess what? That's not investing, that's gambling, okay? So you would want to do what's called average cost investing. You buy across a little bit every day of the month, and that way you know you're getting a piece of every price. And it'll all average out to a really good purchase price in about the right range. So that would be my advice. Make sure you do not put in anything more than you're willing to be sure not to put anything in that's more than you're totally willing to lose without even blinking, and then make sure that you average cost buy. And the cool thing about Coinbase, honestly, and again, I'm not pushing them, but they walk you through the process. And it's very simple, and we know it's trusted. Here's a little background information on Coinbase. They're actually a publicly traded company under the sign COIN. So they have to comply with a whole bunch of regulations about how they make their money and how they're going to stay stable and how what they're doing is trustworthy and all of those things. And Coinbase is a regulated exchange in the US. Okay, so it's not anything you heard about when you heard rumors about Sam Bankman-Fried taking down an entire world with his exchange. Coinbase is regulated. They play by the rules to the extent that the rules are clear. There's a whole other story about not having clear rules to even know what to follow, but they're overcompensating by following more rules than you could possibly imagine. And, again, I'd never tell you how to invest, but it's very easy to go grab your phone, download Coinbase, and within 5 minutes you'll have an account set up, and you'll be able to set it up to take, $5 a day from whatever account you want it to take from. So the really cool thing about that is if you do it with money you can afford to lose, well, I'll say the cool thing, it's actually been a little frustrating for me. So we put in how much we could afford to lose, and it was a small amount, and very quickly made it back. So I pulled that out and put it right back where I took it. So I knew no matter what, I definitely, staying in Coinbase now can't hurt me, right? Because I've already taken back what I put in. That happened within a couple months back then. At that point, what's becoming hard is you're going to see that money start to grow now. Okay, so whereas before you're like, oh, what's in there I can afford to lose, now that it's actually becoming a pretty significant amount that you never had before. And just to give you an example, in one particular place where I'm playing around, I have over 3 years invested a net of $500. And right now that's worth $3,500. Okay, and that's over a 2-year period. And it's just one of the places I've been playing around. to learn how to do crypto, how to do DeFi. And I've been doing inside Coinbase, which has been a really great playground because they kind of take you through it in this weird, yeah, this is new and adventurous stuff, but I know you're 60, 61 years old and you really kind of want to know things are on the up and up. And that's what Coinbase is. It's that nice sort of bridge between, me, the baby boomer, and I love that this is new tech and I want to play in it, but am I just literally giving away the house? So that's the other thing about Coinbase, and the fact that if you go in there, I won't have to talk to you to teach you more and more about it, because Coinbase will take you nicely down the street on how to do this and how to do it safely. So the big thing I want to say here is really, really watch the FOMO. It's going to be really hard over the next few weeks because Bitcoin's going to rally, then it's going to fall, then it's going to rally, then it's going to fall. And if you try and figure out when to put your big chunk of money in, you're going to fail, right? Chances are really good you're going to fail. At best, they're like a roulette table, okay? And you've picked black or red. And if that's what you want to do with your money, okay, like I said, this is not investment advice, but that's not how I talk to you. I talk to you like, hey, I kind of want to get into this and want to see what's going on. I think you've got a really good opportunity here. And what I'll tell you is you're not too late. You're going to sit here thinking, well, everybody's talking about now I'm too late. And I'll tell you, you're not. Because yes, the first wave has come, like the new adapters or whatever they call those people that do anything first. They're already through and have their piece. Absolutely. But you're now in that next wave of curiosity. So if this is catching your attention, you're that person who's like, this is new, but some people have tried it and they haven't died, so I'm going to give it a try. And you're not too late, because there's a lot of people less risk averse than you who aren't going to come in the game until much, much later, which has just proven itself over and over again. Again, what's old is new in the markets as new things have come to play. You can kind of see this flow. It's called the diffusion of innovation, to get technical, but you can see this curve of people who will try it at the beginning when it's risky. Then you're in that next batch. You're still on the up slope of that curve if you are interested in starting to pay attention now. So if you want to get in, don't worry about the fact that you're too late, because honest to God, the talk on this thing, and again, this is not investment advice and I'm not telling you to put your money in, blah, 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 blah. But there's talk of $400,000 per Bitcoin, right, by 2025. Now that's insane, it seems. And there's talk of 100,000, right? But even if they're wrong by 50% and this thing only goes up to 85, right? It's not a bad time to get in at 69. And don't kick yourself. Like, it's going to be a bad time to get in after everybody else catches on. And you're not at that point right now. So what do you think, Murph? Humph. He's always got something to say about it. So that's the thing. Pick how much you want to play with. Would I advise that you do that? Yes. I mean, you and I talk about savings and what to do with it all the time. And take a small piece. Take a piece that's not going to hurt. Even when you put your first $100 in your savings account, take $2, go buy a little Bitcoin. Not to buy the Bitcoin, but to just learn sort of what it's like out there. Cool thing, it's free to get a Coinbase account. You don't have to buy their premium. Just get a Coinbase account, put $2 in. And literally, if you start contributing those little bits and you decide then how much your total is and you start going in a little bit every day, you're going to see some significant gain before this thing crashes. And again, no guarantees. Nothing I say is investment advice. You can tell I'm paranoid. I'll tell you why I'm paranoid, because I watch these guys do their podcasts and their list of disclosures is long and luxurious. And the reason is that the SEC, everybody that's involved with regulating this thing, does not understand it yet. So they don't know how to regulate it. So what they're doing essentially is throwing out lawsuits and accusations saying you didn't follow the regs. And when they're challenged and people say, okay, what regs didn't I follow? The real answer is, well, we haven't really kind of made the regs yet because we don't know what this thing is. And here's what's happening. I'm going to go on a little tirade here because I think it's important. They're talking about making things like Bitcoin or NFTs. I think you've probably heard what an NFT is, just a digital representation of some art or music or whatever it might be, about calling those securities. And let's think about what that means. That means that every time you buy or sell one of those, you would have to report it to the SEC like we do today. It would be a gain, it would be a loss, it would be whatever it is that we'd have to report. How then is a baseball card any different? How then is a stamp collection any different? So what's happening is in the media, it's getting hyped up a lot that Bitcoin is not following regulations, but I will tell you from my very conservative 62-year-old standpoint, that's because nobody's made logical regulation yet for these really technological geniuses to be able to follow. So bottom line on Bitcoin, that was a little bit of tirade. I want to circle back to Bitcoin. There are a whole bunch of reasons why the value of Bitcoin that's there today is much more likely to hold than it was in the past. Number one. Number two, if you're ready to play, don't go with your emotions. Get rid of the FOMO, get rid of the euphoria, just take a deep breath and think about number three, which is how much money can you actually afford to lose? Like if it disappeared tomorrow, you wouldn't be like, oh crap. If you would even say, oh crap, don't invest it. But if it's not money you wouldn't say, oh crap about, go ahead and start playing around in here. It's going to be the future. I mean, anybody truthfully, all right, this is Pam Pryor opinion. Anybody who is sitting here saying, oh, this is just a fad or it's going to go away or we can't count on it is the person who was sitting in the 1990s saying the same thing about the internet. So it's no different. Buckle up. This thing's coming just like AI is coming. And we really do have a chance to get in on the front end of it if you want to. But don't do it with money you can't afford to lose. Because a lot of shit went wrong with the internet before it went right. And a lot of shit's going to go wrong with DeFi and Bitcoin before it continues to go right. But I will say that I believe we're past the stuff going wrong or the big stuff going wrong. And we're down now to just churning away. And if we're on the train, it'll be a pretty interesting ride. Again, not investment advice, but have a great week. I hope that video was helpful, and I hope you subscribe to my channel for more information on finances in your business.